Ever wondered why the stock market has been on a downhill journey lately? It's a question that's been plaguing many. Well, let's take a closer look at a key player that's been stirring the pot: inflation. Recent economic reports reveal that inflation, although slightly down from its peak in 2022, still hovers higher than anticipated. This has led to concerns about the Federal Reserve potentially taking a more aggressive stance in raising interest rates to keep inflation in check. But here's the kicker. Higher interest rates can put a damper on economic growth. It's like putting the brakes on a speeding car, slowing down the momentum. And let's not forget, these higher rates can also make stocks less attractive to investors. It's like being at a buffet with your favorite dishes suddenly priced higher. You might think twice before filling your plate, right? So, in essence, the ghost of inflation has been spooking the market. But inflation isn't the only culprit here. The other major factor causing the stock market's slip is the uncertainty surrounding the Federal Reserve's future actions. Investors are playing a guessing game, trying to anticipate the Fed's next move and how it might impact inflation and economic growth. This uncertainty is causing some investors to retreat from the market, choosing to err on the side of caution rather than risk potential losses. And the losses aren't isolated incidents. Major stock indexes like the Dow Jones Industrial Average, the S&P 500, and the Nasdaq Composite all experience declines. This isn't just a slight stumble in one sector. It's a broad sell-off across different sectors of the market. From tech to manufacturing, no industry is immune to the current market conditions. The uncertainty and widespread losses paint a clear picture. Investors are playing it safe, and the market is feeling the pinch. Now what? Is the market doomed, or is there a ray of hope? Let's navigate these choppy waters together, starting with the upcoming Federal Open Market Committee meeting. Any announcements regarding future interest rate hikes could significantly influence the market's direction. Investors around the world will be watching with bated breath, their eyes glued to the outcomes of this vital meeting. But that's not all. Economic data releases, such as inflation reports and job growth figures, can offer crucial insights into the health of the economy. These figures can serve as signposts, helping to predict the Federal Reserve's potential actions. Think of these pieces of data as navigational tools, guiding you through the stormy seas of the market. Remember, knowledge is power. Staying informed about the economic landscape can help you anticipate market shifts and make wise investment decisions. In these turbulent times, keeping an eye on the economic horizon can help investors steer their ship safely.